Hello, everyone. Yes, hello. It's currently 7 in the morning. It's tape reading for NASDAQ for yesterday's price action. We're gonna talk about how yesterday was a right. So it's not fun typing, but I really want y'all to to know what I'm talking about, right? So yesterday was a high resistance, low probability setup. High resistance basically means there's a lot of uh what can I say? Yeah, I'm trying to find a way to put it in the best way possible. There is a lot of violations or levels that are not being respected in the market when it aligns with your bias, right? So your bias is pretty much being um, violated, should I say, or it's really hard for price to book its um, levels towards your bias, right? With the direction that you're seeing, which shouldn't be hard. I really feel like everybody should have their directions or their bias as soon as we sweep either high or low of London and Tokyo. Now, one reason why, let me just go ahead and remove that. One reason why yesterday was a high resistance, was a low probability setup, is because the day before that, we have taken out buy side of Asia and buy side of London. Now, here we've only taken out one liquidity pool before New York open, 9:30 open, right? We've only taken out, okay, we have taken out, no, okay, cool. We have taken out the buy side of Tokyo, but before NQ, we take out the low of London. So now we haven't taken out the lows of Asia, which would make sense if this time frame range took it out for us. Instead, it took out the high for us, right? It took out the high, and now we have a very low probability setup. When it's high probability, that's when both time frames, both ranges, Tokyo and London, are taken out, are both aligning with the liquidity pools being taken out, right? If buy side of Tokyo is gonna get taken out, then buy side of London should get taken out. If sell side of Tokyo is gonna be taken out, then sell side of London should be taken out. Just like yeah, buy side was taken out and buy side was taken out. And even after that, before NQ, we took it out, right? Okay, so now that we know where is our drawn liquidity, even though it's in a low probability zone, we actually do know that we're looking for a buy today, right? Because we have taken out the low of London. So in this type of climate or in this type of condition, in this type of setup, it's only for um the not the best traders, but traders who know how to deal with this based off of their previous market plays, previous market stats. You always have to journal to know where and what is going on and where you stand and what's going on, right? So we have a high here and we have a low here. Always look for the ranges, right? So here's sell side and buy side, right? And this, right, this green, excuse me, this green right here is our new weekly opening gap. So we are we were still in this range, right? And above that range is a big 4 hour candle. It's a sell gap, right? So now let's drop to the 5 minute and see how we're getting it. Exactly. So we've taken out the low, right? With this candlestick right here. This okay, we haven't taken out the low close, but this is the one that has taken out. Now yesterday, as I saw this, I highlighted this, right? I drew a line here because this was the low I was waiting for us to take out before New York session. But we didn't. We just displaced above and never came back to tag anybody in, which is mad. These are one of the days where the trade will go without you, right? And I do not dive into 1 minute. I sometimes I do, but regular times I don't dive into 1 minute because it's just way too much indicators that you don't even know what direction to go towards, right? There might be 5 sell gaps and 5 buy gaps. If you just take all of those gaps as indications, you're going to be buying and selling a lot, right? I just need one on a bigger time frame to tell me what is the overall bias. But obviously, I have to match it up with a whole setup, right? It has to align with the whole setup. So now, since this is the breakup structure, highlighting the gap after that would be reasonable, right? Concerning the fact that we trade FEGs, trade fair value gaps after the market structure shift. This is a big shift, but price still came back down. But this is why it's low probability and low resistance and high resistance, is because after we tap that gap, we haven't taken out TP, which should have been this high, right? So in this case, you would miss your entry. Well, I did, but just know that price always reacts to old levels. So you just keep the gap there and wait until price draws back down to it to see. To a beginner trader, they would trade the draw, right? They would trade the retracement, which is not recommended, right? You never know when the market is going to go back down to that level. Market may not even go down, right? Don't trade the retracement, just wait for it to come back and place your order there, right? And trading the retracement kind of sounds like more money. It is, don't get me wrong, it is, but it's just not recommended for any type of beginner trader because there's a lot of entries and a lot of noise that price makes before the join liquidity, specifically in this right? In this time zone right here. In New York, you'll never get a clear move, right? I mean, you can on a good day, but please don't trade the retracement. Rather watch the retracement for over 3 months, document it, build a strategy around it, then trade the retracement. But if you know this is your entry zone, but since you also know that price is gonna come down there and you trade that, I mean, good luck to you, right? But the only reason why I can say that we have retraced deeply and positively is because this is a positive retracement. This is seen from here, right? We can only see that price is gonna come down here because of the gap before that, right? So the only reason that would have happened is because the tap in on the 4 hour gap, the sweep of the London high, sweep of this range high, right? And this fair value gap, sell gap. Right? Even though we've created a whole lot of noise around it, it has played its part, right? So this was a good retracement, but I recommend nobody chase it. We're not here to chase those chasements. And I'm saying this from experience, right? But let's see how you would have entered. You should have entered this trade, right? Because, first of all, we're in a high resistance market condition today. Second of all, there's low probability concerning the fact that we've only swept one range high low before NQ. So yeah, when it's a high resistance market, right? Was that I really want y'all to pay attention to this because a lot of people don't know how to recognize a market condition or time frame or a market condition or how the market is playing at a specific time, right? And they don't know how to base their setups off of it. They'll go the same way they go on a good day, the same way they go on a bad day, which is not. I mean, this is a business, right? So you have to know bad days and good days. You have to know when the conditions are bad or good. If you're running a business, let's say y'all are selling products, ice cream. Would you sell ice cream when it's raining the same way you would sell it on a hot day? That's just too much work for a less likely environment that you are gonna sell, right? It's less likely for you to sell on an ice cream on a rainy day than it is on a hot day. So imagine on a rainy day, pull out the banners, pull out the flyers, play the speakers, advertising your ice cream to the world. Nobody's buying that. I mean, you can advertise all you want. Nobody's buying that because it's raining. So it's raining, right? So in this condition, stop loss should always be at the end of the gap, right? Not at the low of the whole move, which is good on a good day, on a low resistance day, right? To put your stop at the low. But here we're aiming for defense first, right? Not offense. Not offense, right? And since London highs has been taken, the only excuse me, just keep on yawning. The only high we should be looking for, or during liquidity we should be looking for, is this one, the recent one, the recent high. All right, intermediate term high too, because I think there is a head and shoulders on the 1 minute. All right, so where are we? Okay, cool. Yeah, so this should be mind you, this gap was before NQ. Old levels always get respected. But on the 1 minute, we have heads and shoulders right here. Right? So that is an intermediate term high. And that should be the only drone liquidity that you are looking for on a day like this. Right? So, yeah. And there was no new daily opening gap, at least not on this chart. So I didn't even have the luxury of trading it. But this was just yesterday's setup, yesterday's execution breakdown for y'all so that y'all can see. And yeah, I hope everybody stays safe. Everybody keeps on trading the right way. I've realized a lot of people be trading the wrong way. But even though they can make multiple withdrawals, it won't feel like they're doing it the wrong way. It'll just feel like a glitch, or it'll just feel like the right way. And for the long term, it's not gonna be good. But it is what it is, right? I just hope everybody trading good. I hope everybody understands the video, drone liquidity, and I will drop another video on the basically silver bullet entry with some tweaks, right? Because if you're still trading ICT silver bullet strategy without your personalized tweaks and additions in this market conditions, man, you are like you're like uh seventh grader with nothing but daycare knowledge, right? It's time you level up. It's time you get some more knowledge. You gotta add some tweaks to the silver bullet, right? Especially in 2025. So yeah, probably drop that after tomorrow on a Good Friday. And I hope y'all really understand this video, understand how I got my drawn liquidity, understand how I managed my trades in this type of market, understand how I have determined what kind of market we are in based off of what I see, right? And yeah, currently dropping lower than ever. I think is because China just hit us with a new tariff of 125%. So I'll see y'all in the next video. Cheers.